let's get into our main story now. So I've been covering this last week. I did a video on this, how there was a huge hedge fund that defaulted on a $1.7 billion mortgage-backed security, commercial mortgage-backed security. And in 2008, we had the residential subprime mortgage crisis. Well, I think in 2023, we could be facing another mortgage crisis, but this is actually going to be in the commercial real estate sector. Now, the reason for this is because, like what happened in 2008, when people had these balloon payments or they had these adjustable rate mortgages, a lot of commercial real estate investors took on these adjustable rate mortgages. They took advantage of record low mortgage rates during 2020 when they were at zero, and now mortgage rates are skyrocketing. So unlike in the US where they have 30-year fixed rate mortgages for residential, in the commercial real estate sector, a lot of these investors took these adjustable mortgage rates and now they're severely paying the price. And this is just the beginning, everyone. Every day now, when I'm checking the news, I'm seeing another hedge fund or another landlord has defaulted on one of these commercial mortgage-backed securities because these properties have huge vacancies. They're losing value. So a lot of these landlords may think, look, maybe it's just better for me to walk away. And they're saying, like I said, if you owe the bank $1 million, that's your problem. But if you owe the bank over $1 billion, well, now it's the bank's problem. So look at this, everyone. Blackstone defaults on Nordic CMBS as property values wobbles. So that's right, everyone. So it says here, BlackRock Inc. defaulted on a $531 million, that's $562 US bond backed by a portfolio of Finnish offices and stores as rising interest rates hits Europe and property values. Now, again, I'll get into a moment. This is talking about one of their portfolios in Europe, but this is happening across the whole world. It's happening in the US. I just did a story on that last week. I'll show you a few other developers or hedge funds in the US that are defaulting right now. This is going to happen across the whole world. And again, I think this could be the beginning of a new financial crisis. It's not me being exaggerated, being alarmist. This is just the facts, what's happening right now. But of course, most people don't know what's going on in the commercial real estate sector. They focus on the residential sector, but most, average Joes and Janes, they don't know what's going on with commercial real estate. So Blackstone, which acquired a landlord in 2018, sought an extension from holders of securitized notes to dispose of assets and repay the debt. According to people with knowledge of the plan, bondholders voted against a further extension, the people said, asking not to be identified as the sales process was not public. So you're seeing here these investors, these bond investors, they want their money and they want their money now because they know the situation is going to get worse. Blackstone tried to ask for an extension, but they said, no, we want our money now. And they also don't want this to be very public. This was kind of leaked out to the press here. And they asked not to be identified because who knows who holds these bonds, what kind of powerful big banks hold these bonds. And if news comes out who's holding these bonds and they know that they're not going to get their money back, if they have portfolios or if they have hedge funds or if they're banks, well, then their shareholders are not going to be happy at all. So property values are dropping in Europe. Again, this is happening in the US, Australia, etc. as well, as rising interest rates put off buyers until a clearer picture about how far rates will rise emerges. That's right, everyone. They keep saying, oh, don't worry, we'll just do another 25 basis point hikes. Okay, just another 50. Well, every single month, interest rate hike expectations are going up. Nobody thought that in 2022, at the start of the year, that we would be at near 5% interest rates now in the US, or even in Australia over 3%. And nobody thinks now that will go above 6% or 7%. And nobody even wants to thinking about what if inflation gets out of control? What if we have to go to 10%? Okay, we still have so much uncertainties right now. That's led to wide gaps between bids and offers, crippling deal volumes and putting pressure on owners with loans that are maturing. About a third of all loans in commercial mortgage-backed securities maturing in 2023 and 2024 face high refinancing risk, according to a study published by Scope Ratings in January. Wow, everyone, this is crazy. In 2023 and 2024, you're going to see a bunch of these commercial mortgage-backed securities maturing, and now all these landlords, they're going to go from 2-3% interest rates to 6 or 7. And like I was talking about, investing in real estate with the yields you're getting right now compared to what you can get with bonds, it doesn't make sense. I know yields are a bit high in commercial real estate, but still the yields are very low compared to what they've normally been. And now with mortgage rates or interest rates sky high, your financing costs are a lot higher. So the math just simply doesn't make sense. You can get a better return just putting your money in a bond or just putting your money in a bank account. So why take the risk and hassle of having to manage a property, deal with all the maintenance, when you can just put your money in a term deposit or a bond and do nothing? Concerns about how far values could fall are encouraging lenders to push for sales more quickly, while borrowers would prefer more time to seek higher offers for their properties. Another big thing here happening, everyone. Values are dropping right now, and so lenders, pretty much what they're doing is they're telling them, sell now. Lenders want their money now because they know prices are going to have to fall. Again, simple math, with yields going up, new people coming to buy these buildings, it doesn't make sense for them. They're offering them huge discounts. So lenders are pretty much doing 4 sales here. This is kind of like a margin call on stock where, you take out a 70% loan on your portfolio, okay, then that loan to value drops and you have to sell some stock in order to bring that loan to value ratio back up. This is what we're seeing now in the commercial real estate sector. The banks are feeling very uneasy and borrowers are saying, look, we need more time because the offers we're getting now are bad. And the banks are saying, well, look, that's your issue, not our issue. So the drop in prices has so far not led to widespread credit losses. So some creditors are betting that rapid sales can still ensure debt is fully repaid. That's right, but that clock is ticking because those prices are falling every month. So this debt relates to a small portion of the Sponder portfolio. A Blackstone representative said in an email statement, "We're disappointed that the servicer has not advanced our proposal, which reflects our best efforts, and we believe we would deliver the best outcome for note holders. We continue to have full confidence in the Sponder portfolio and its management team, whose priority remains delivering high quality retail and office assets." So again, they're saying, look, this is just a small part of our portfolio, but again, every single day we're seeing another property default. We're seeing another commercial mortgage-backed security default. And this is just the beginning, everyone. Like they'll say at the start, 2008, okay, maybe a few people, are doing some foreclosure on their homes, nothing to worry about, but that's just the beginning, and it creates domino effects and it gets rapidly worse. So we have to pay attention to the signs because you always get early signs. So Nordic real estate has been at the forefront of Europe's real estate correction after a long period of relative calm following the global financial crisis. That's right. So a lot of these places in Europe still haven't recovered from the financial crisis, and I think this is going to be coming to the US and Australia soon. So investors have been spooked by the landlord's use of relatively short-term debt. Again, exact same thing what happened in 2008, which has made them more vulnerable to the rising rates. The level of cross-ownership in the sector, where multiple real estate companies own stakes in one another, has also exacerbated concerns. So I don't know about you, but this has given me deja vu to what happened in 2008. Short-term debt, which has led people to be vulnerable to high interest rates, cross-ownership in the sector, so again, we have that contagion effect, and this is giving big concerns for the commercial real estate sector. So in the US, where valuation declines have been more severe and rates have been higher for longer, owners such as Pacific Investment Management Co., like I was talking about earlier, Columbia Property Trust, and Brookfield Corp have also defaulted on mortgages. So again, it's not just this one. This is happening to hedge funds in the US as well. Or Blackstone is in the US, I should say, commercial properties in the US. The US office market has been particularly hit hard by the pandemic-induced shift to home working. That's another thing, everyone. We're not going to see this shift all of a sudden U-turn. Yes, we have seen a lot of people return to the office since the pandemic, but we still have a lot of hybrid working. And when technology keeps getting better, when people's internet keeps getting better, really what we got to worry about is artificial intelligence. When that gets better, we're going to have a lot of people be able to work from home. And they're not going to need this commercial office space. And so that's going to be more downward pressure on commercial real estate. Blackstone's notes have now matured and have not been repaid, prompting loan servicer Mount Steer to determine a default. So that's right, everyone. They've matured. They're not paying. According to a statement on Thursday, the loan will now be transferred to a special servicer, it added. And FinTech downgraded the notes in December, saying that the weak macroeconomic outlook and limited appetite for lending against secondary quality illiquid assets create significant challenges for refinancing. So again, we get signs of this. We get signs of this months before it happens. I try to put out these warning signs, but people want something to happen the next day. They want, real estate to crash 80% in one day. Otherwise, you just fear mongering. There's nothing coming. The loan was originated by Citigroup Inc. Look, this is how it has contagion effects around. These are the banks that have been lending to this Blackstone. So the loan was originated by Citigroup Inc. and Morgan Stanley and is secured against 45 properties in Finland, most of which are offices at the time of the downgrade, which is 271 million of the senior loan remained outstanding according to Fitch. So we see here how they default on one property. This affects the banks. Investors have shares in the banks. That affects the investors. That affects the bondholders. They're not going to get their money back. So we can see how quickly this has dominoes throughout the whole financial system. So the portfolio is about 45% vacant, having risen about 10% points higher during the pandemic. According to a report, travel restrictions then hampered Blackstone's sales efforts before the war in Ukraine unleashed a fresh wave of volatility. That's crazy, around 45% vacancy. And I know there's more and more office buildings in the US, Australia, around Europe, etc., that have huge vacancy rates as well, but they haven't defaulted yet. But with values falling so much, they may just simply choose to walk away. So again, what this simply means is these commercial landlords did something very, very silly. And unfortunately, what I learned from history is we don't learn from history. They're doing the same mistakes they did in 2008. Everybody thought interest rates would go to zero, stay there forever. But then what the markets got was a shock of inflation. We all saw it coming. We saw when they increased the money supply so rapidly, there was going to be inflation, okay? And so now this has caught a lot of people swimming naked. They've been exposed for the huge leverage they're taking on. And this is something we're definitely going to have to watch. This is something that I'm definitely watching and what I think is the most important on my radar for the financial system, what could cause another financial crisis. But what do you guys think? Let me know.